Good morning, everyone. This is Catherine Nguyen, Vietnamese American Chamber Chair, and we have here Thanh Pham. If you want to give me a quick introduction.
Good morning. I've been a board member with the Vietnamese American Chamber for a few years now. My full-time job is I am the president and CEO of California International, the only Vietnamese American depository institution in the country.
Thank you, Thanh. And also, I'd like to add on, he's also going to be he's currently a chair-elect for the Vietnamese American Chamber, and I'm really excited for you to take on the lead next year. And so because of that, I'd like to also, go into what you know best is banking and understand what's happened recently in recent news with, SVB being one of the largest banks to fail in recent years, followed by Signature Bank and First Federal. Can you just explain how and why these banks collapsed in your mind?
So the reason why the banks collapsed is what we call a run on the banks happened. Classical run on the banks. So basically, the depositors lost confidence in the banks and took out all their money. That's plain and simple, classic bank run. There's various reasons why they lost confidence. We can start with SVB, the big one, Silicon Valley Bank. So what happened there was they sold a portfolio of bonds that lost a bunch of money, and then they failed to raise capital to plug the hole. So their depositors freaked out and just took out all the money. It's classic run on the bank.
Yeah, I mean, I just see, consumer not knowing exactly what's going on. I mean, the FDIC is stepping in, and yeah, I mean, a lot of us consumers don't always keep 250,000, but some more affluent customer would be the first to think, what should I do? So how and because of this run on the bank and then the FDIC coming in, how is that affecting our consumers and their deposit? I mean, they did say they're going to protect it, but is there more that we should know about the FDIC and how we should protect ourselves?
So just to be clear, they said they're only protecting Silicon Valley Bank and Signature. So those are the only
Mhm.
banks currently protected. The, the government came out and designated them as systematically important so that they
Mhm.
could they could cover deposits that are uninsured. Um, but pretty much the best way to protect yourself is to diversify your banking relationships, and within your banks, you can diversify with account types. So it's very easy. You can go to the FDIC. They actually have a fun little calculator called Eddie, Ask Eddie. But generally, every account type and beneficiary
Mhm.
will get 250,000 in insurance. So one example is a husband and wife. If they go in and open one account each, that's 500,000, and then a joint account that would then become 750,000. And then if they opened up a CD, it could go up to a million. So account
Got it.
types and beneficiaries. So that's one way. I mean, if you have a trust, then you could potentially open up a trust and name a bunch of beneficiaries, and each beneficiary gets 250,000. So you can run your scenario on the FDIC website actually.
Great. Thank you for giving that information. Can you repeat that the site again, just to make sure everyone heard that?
It's the
It's Eddie.
FDIC, and
Uh-huh.
then on there's a calculator called Ask Eddie.
Ask Eddie. Okay, awesome.
Yeah, Ask
Now you
Eddie FDIC calculator. If you type that in, it'll come up. If you
awesome.
Google Ask Eddie FDIC calculator.
You'll get that. No, that's really good tool to know.
But
I mean, not everyone. So, some of us would love
yeah,
to
if you
be
come,
able to calculate. I'm sorry. Can you hear me?
yeah. Oh,
Okay.
well, if you come into my bank, we'll calculate it for you. But
Okay.
um,
Yeah. Make sure
essentially,
we'll
the
definitely send
FDIC
our
calculator.
members over to you and make sure they understand how to calculate that. Well, you brought another point that you brought up here that I think is important to ask is that you were talking about consumer. However, we do have business clients or members of the chamber. How do they protect themselves against with this type of scenario? Because not the banks both personal and business. Can you talk more about the businesses and how can they protect themselves? Now, also within businesses, they use multiple financial instruments such as standby LC, commercial LC. some backed by different, instruments such as CDs or money market. Can you kind of explore or explain to us more about how can businesses also protect themselves in this type of scenario?
So businesses, unfortunately, the primary way there for them is to diversify their banking relationships to minimize the 250, or
Mm-hmm.
businesses can seek out banks that participate in the ICARS or CDARS program.
Mm-hmm.
And then that's a system where the bank will then send their deposits out to make sure it's fully insured. And with FDIC insurance, only deposit accounts are covered. So stuff like letters of credit, lines of credit, that if the bank fails, then there's no obligation for anybody to
To
live
pay,
up to the
to
yeah
cover,
live up to the letter of credit or line of credit because that's a contract.
right? Well, that's really important to know. So in this situation, you're talking about SVB and Signature Bank being one that the FDIC is securing. So those businesses that do bank with those two institutions at this point should be secured at least for some part of those funds. Am I right?
They're 100% secure. So it's
Okay.
actually business as usual for them now until they get likely get bought because right now the Fed is auctioning off both banks. One,
Right.
the SVB auction went, but it fell through.
Mm-hmm.
So it's business as usual
I
until
saw that. Yeah, we saw HSBC in the UK took some of it for SVB, but you mentioned which bank has been looking at them? Have you heard or a lot of clients of ours or members are asking, is it going to go to a larger bank? Should we, you know, who do you think in your mind that should be, looking into this two banks?
most likely a bigger bank. It's pretty tough to be able to come in and buy the bank because the regulators are going to want an experienced management team to take over. There's not a ton of those out there. And then you got to come
Mm-hmm.
up with over 20 billion in capital to buy SVB. So that's not too many people out there that can just write a check for that much.
Yeah, so you could think of a few banks already on top of your
Yeah,
head. The
yeah,
bailout
probably
bank.
going to a bigger bank. Yeah, or maybe bank a little bit bigger, maybe not a merger bank, not a mega bank, but it's definitely likely. If
Bigger
I
than
had to bet,
20
I'd bet
billion.
on a bigger bank. Yeah, but your deposits are safe there, so there's no reason to panic if you're banking there.
So one thing you would want to tell all consumers and businesses working currently in those two banks is, business as usual, stay calm, keep your heads down, focus maybe on your supplier for some of those businesses to reassure them that things are smooth as needs to be. And in the meantime, just wait until what the Fed's going to do in terms of, find the right home for these two banks. But the other, which is going to lead me to the next question. It's going to lead to asking, would this trigger another larger bank crisis? Because again, some smaller banks are also potentially playing this kind of sector, and they might be hit hard by something like this. So how do we know? And is this going to be a ripple effect?
Well, when I say just to go back to a point, when I say business as usual for Signature and SVB, it's business as usual for the time being. I would still recommend finding a new banking relationship. It's just for the time
Mm-hmm.
being, business as usual. Your deposits are insured. In terms of a bigger banking crisis, it's probably not likely. In fact, the bigger banks are only getting bigger. The deposits that are leaving SVB and Signature are actually going to the bigger banks like Chase and Wells Fargo. I think in one day, Bank of America actually got 15 billion in deposits in one day. Chase is
Yeah,
just so overwhelmed; they have to waive their some. They have to start streamlining their account opening
the deposit.
process. So yeah. And then if anything happens to the big banks, they've already been designated as systematically important.
Mm-hmm.
So it's almost a
Yeah,
guarantee the Fed will step in there.
we lived through that before 2008, so we know
Yeah,
that most likely
yeah.
happen again. Good to know. Good to know. So I just have another question to you. Then, obviously, I think you answered the question in terms of in the larger banks crisis, which kind of goes into the U.S. financial system, which it seems that they caught this early, so it should be any additional deterioration of financial system, would it? Can you kind of just touch base a little bit on that?
So what will happen? Well, I don't have a crystal ball. I do not. I will say that I don't foresee a bank run of similar nature happening to other banks just because the Fed has effectively said they're going to step up and insure depositors. A future bank run will be due to actual credit losses or
Yeah.
banks losing money because banks been making long-term loans with short-term
Mm-hmm.
money. Now they got to pay more for that short-term money. So as banks start to make less money just as rates stay elevated, that
Mm-hmm.
will probably be
Yeah.
what
Yeah.
causes is a another bank failure. But in terms of a banking system collapse, highly unlikely.
Okay, thank you. Thank you for coming to that question. And yeah, I mean, that's that we don't know anything about the future, but it's good to hear from your standpoint, especially that you're in your position, reassuring the consumer and businesses of what to do, and then make sure what I'm getting here is truly diversified. Like anything in investment, especially diversified and keep everything in one basket. So that's kind of your message here. Um, to make sure that if you are banking with a student institution, business as usual, but it's time for you to at least start looking at other institutions to park your funds. And larger banks seems to be the better option, obviously. But with larger banks comes, you become kind of a widget. Do you have any other recommendations for businesses? Because again, knowing large banks have kind of their tiers and they are very much not flexible. What would you recommend for other businesses that would want to continue working with smaller banks, and some of your best recommendation and best practices for those businesses and consumers?
Well, there's actually a lot of good options out there. So I think you can the if you're looking for a new bank, pretty much it should be because you have some type of lending. They've
Hmm.
lent you money and they have to have some type of specialized understanding of your industry. So I would go
Hmm.
find a bank that understands that.
Right. And then consumer, obviously,
And they can
consumer is
call you to
easy.
help them with it.
Yeah. Call me. Yeah, and also the same goes this way. You are the only Vietnamese American bank in California. So as the Vietnamese American Chamber, we also want to help individuals and businesses in our industry, in our community. So same goes your way. Hopefully, anyone that has questions regarding the what's just happened in recent days, go to your bank. You can do the calculation like you said, and you'll be happy to help set up the bank account as well. I'm assuring, right?
Yeah,
Same. And then yeah, if you need,
whatever it takes.
yeah. And so we'll both here. So thank you again, Tan, for giving us such a great insight of what's going on in the bank. For those that don't understand banking, especially, and some of them that understand part of it, and businesses that don't understand, this is really helpful. We do appreciate your time in this morning, and I'm sure you're busy with your own banks and customers coming to you open accounts. So with that said, is there anything else you'd like to add to our members and things like this you should think about before we close this call today?
Well, I would just say a couple things. Stay with regards to your banking relationship industry wide. For now, stay calm. The Fed has said they're going to step up, but it doesn't ever hurt to explore other relationships. And we're here.
Okay.
We're here to help in any way.
Yeah, the chamber is here. So again, thank you, Tan. And for those listening, we are very thankful that you chime in and actually join this meeting today, hearing what we have to say about the current U.S. bank collapse. Again, like Tan and I said, we're here to help any businesses that have any question or any consumer that has questions. You can contact us going through our website at www.vacoc.org, and we'll be happy to have a chat with you as well. So with that, thank you again and have a wonderful day. Thank you.
Have a good one. Thank you.